Well, good evening, everybody, and welcome to Freedom Mentor Live. I'm your host, Phil Pustiowski, coming to you from my home in the Florida Keys. We're also joined by the brilliant Ryan Bush. Ryan, welcome.
Hey Phil, how are you this evening?
I am great. So glad to have you here. And we have a special treat here tonight, ladies and gentlemen. We're also joined by a fellow Freedom Mentor coach and a brilliant real estate mind himself, Mr. Devin Sheehan. Welcome, Devin.
Hey Phil, how are you? Thanks for having me.
Oh man, we're doing great. We're so glad to have you. You all have probably seen plenty of videos with us three on together, and it's Devin's been doing a lot of deals recently, and so it's been great to be able to have him back here tonight. Also, I'm going to tell my crew backstage here, you all on the other side of the screen is a media player that I'm seeing, Michael. So you may want to adjust that. And I'm going to try to, there we go. All right, it's all fixed now. All right, you all. Well, this is live, as you can see. And someone said, are these recorded? Yeah, you can go to our YouTube channel to see the recordings of these. It's under the live tab. So let's make sure that everybody can hear us, everybody can see us. So there in the chat, if you could type where you're coming to us from. Like I said, I'm coming to you from the Florida Keys. And if you all have never been to the Florida Keys, you are missing out on a marvelous part of the United States. We've got Ricky in Corsicana. Ricky, I know where that is. I'm sure you heard me say that before, but that is just north of Hillsboro, Texas, where all the Pustiowskis are from. Brian is from coming to us from Texas. Devin, you're coming to us from an island off the coast of Rhode Island, right?
Yes, I'm currently in Block Island.
Block Island.
Yep.
There you go. So yes, we are all connected by Zoom, but we are spread out. David from Seattle, Mike from Wisconsin. Hey, Mike, I remember you on a previous event. Marcus from Pittsburgh, Thomas from St. Louis, Timothy, you're from LA, Indianapolis, Memphis. Tyrone's from Tyrone. Okay. I have not been there, but that is a great place, it sounds like.
That's awesome.
Well, excited to have you all here tonight. So it's all about the state of the market tonight. And we've done this for years. Brian, Devin, and I, we get together at the beginning of the year and at the end of June. And we do both a state of the market for the upcoming year, in this case, 2026. And then we do one mid-year. And we do this for a couple of reasons. First of all, once a year is just too far of a distance. But second of all, we decide, and you all can decide as well, were we right or wrong 6 months ago? Right? How well did we predict? Because it always has bothered me that when you watch sports analysts talk about what's going to happen, and then it doesn't happen that way, they never take responsibility for that, right? So, Brian, you're a Cowboys fan, right?
Yes, yes, I am.
Begrudgingly, unfortunately, it's hard to be a Cowboys fan. But when they say the Cowboys are going to win and then they lose, you never hear them go, "Oh, my bad, that was me. I didn't predict that right." So we're going to be brutally honest on how our predictions were from 6 months ago, but also equip you all with. All right, so Tyrone, you're from Florida. Doris from Boynton Beach. Um, we're also going to equip you all with the knowledge you need to be prepared for the upcoming 6 months. Not that we have a crystal ball, but because of all of our experience and because of all of our activity in the marketplace, we seem to do a pretty good job of determining what's going to happen. All right, so let's start here, Brian, with let's start with you. You skimmed through everything we predicted at the beginning of 2026. How did we do?
Overall, our report card is an A.
It's an A.
Not just trying to brag on us, but I think we did really, really well. We were looking at a number of things, including interest rates and changes in the chair Fed. Now, one thing we didn't know going in, of course, was what was going to happen on the foreign affairs front. So there's been a few curveballs thrown in, but overall, everything's going the way we kind of expected it to go at this point.
Devin, was there anything that jumps out at you that you didn't predict 6 months ago that you're running into now in the marketplace?
I would say for me, I was a little more bullish on the rates coming down. And in fact, they're going potentially in the opposite direction. So was a little surprised by that. I thought we would see some relief there, but really no relief yet.
Yeah, I of course is very hopeful that we would have had some more relief. I too thought we were going to have that. I didn't predict the conflict in the Middle East, um, but we predicted this idea that it would be pretty steady, that there wasn't going to be a lot of gyrations, and there hasn't been. So, yeah, it's exciting to see that in my opinion, we nailed it. But you all in the audience, I don't know if y'all watched our predictions, and you feel free to throw in the chat if you think we're wrong. Huh? This, you know, anything goes here. We're live, and we want you all to share your thoughts. So, so Ricky, you were saying boo here in the chat. I didn't know if you're talking about real estate or or what. You're talking about the Cowboys. Okay, huh?
Yep.
Got it, got it. Well, the first big thing that you all need to be thinking about as we move into the second half of 2026 is that there is less competition for what we do. And so I'll throw this to you, Brian. Brian, why are we seeing less competition?
I think with interest rates where they've been, they haven't moved as we talked about 6 months ago and a year ago, really. If we can see them drop into the fives, that may push a lot of movement in the market, but that just hasn't happened. We're seeing them start to trend the other direction, if anything. So overall, it's kept a lot of people on the sidelines. A lot of investors have sat still, and there's plenty of homeowners that have had to do the same, but there's starting to be some problems that they can't sit still through. So, the things that always bring us deals, those are the people that continue to raise their hand, and they need what we can bring.
Okay, so interest rates. So they've, in a way, by staying elevated, if not climbing slightly, it's worn down all of those would-be investors, all of those would-be going to try to do their first deal. It's kind of choked them out. Um, what else, Devin? What else might be playing a part in less competition?
I think the focus, it always comes down to the focus and consistency, but there's more shiny objects out there. I mean, with the goal, I'll call it the gold rush of AI, a lot of people are thinking, well, how can I now make my money in AI? So they take their eye off the ball. They're not focused on the tried and the true, and they get distracted by things that they think are going to help them get to where they want to go. And they get distracted. Lack of focus and the new shiny object for them to kind of take them into a space that they hope will help create the financial goals that they do have.
Yeah, such a great point, right? I mean, the darling that was real estate for building financial freedom,
Hmm.
it's almost taken a back seat,
Yeah.
which of course we love. Less competition, more for us. We love it. But yeah, there's been a lot of excitement. I mean, it was cryptocurrency, it's AI, it's things that don't relate to real, tangible. And I read an article about why Warren Buffett didn't buy real estate. Why wasn't he a real estate investor? By the way, those in the chat, does anybody know why? Why is Warren Buffett? And I know he's at his age now. It's way too far for an old guy to learn new tricks. But why didn't Warren Buffett put a lot of time, energy, and investments into real estate? Let's see if anybody can figure that out. He buys what he knows, is what Garrett says. Yes. But the thing is, he's bought a lot of stuff. I mean, he knows a lot. The guy's an absolute genius. In fact, when he was in his teens, I read his autobiography, Snowball. Um, he was able to make a lot of money as a teenager at the dog track because of his ability to take all of those statistical, all of that data and be able to parse out predictability on which dog was going to win. And so, yes, he does buy what he knows, but it turns out for Warren Buffett, of course, he has a lot of he has to make big investments. If he was going to do a 250 or $500 million investment in some real estate development, it could take several years. So it seemed to him like it took too long, whereas he could just buy stock that day. And I think some people look at real estate and they think in terms of cryptocurrency and AI and at the speed, and they think, well, real estate, it might take too long. But the irony is there's so much money being made in real estate right now, and we just don't have the same competition we did. And so I'm looking around, Brian and Devin, I'm looking, where'd everybody go? Thank goodness. Hallelujah. Now, for those of you who may not know, Devin also is a very productive real estate agent. That's right. You can be a successful real estate investor, do the creative investing in house flipping like we do, and then be an agent as well. It's very productive. So, Devin, what are you seeing as far as new agents trying to come into the marketplace?
Yeah, I think new agents, there's been a lot of shows around real estate, right? A lot of jazz around it. And we're seeing a lot of people come into the market and within 6 months they're out. They just don't understand how difficult it is to get traction as a successful agent, to build a clientele, to have a referral basis, to win those listings, to work with
Yeah.
those buyers. It's very, very challenging. So that gap of people doing a lot of business and the gap of people doing a little business is getting wider and wider and wider, especially in the market that we're in with the interest rates being as high as they are and inventory in certain markets. Like in my market, inventory is very, very low. Other
Yeah.
markets, inventory is plentiful, but that makes it very challenging to move product as well. We're seeing massive separation.
We're seeing that on the investing side too, aren't we, Brian?
Absolutely. Real estate has always been what you might call a low barrier to entry business, right? Anyone can kind of call themselves a real estate investor, and oftentimes end up in a position where they know just enough to be dangerous. And if they've got a little bit of cash, a little bit of credit, can go out and lose it really fast. But as we have seen tougher times in the sense that everything's not just up and up and up and up, and you can make mistakes and still make money, that definitely weeds out a lot of the folks that didn't have the right training, didn't have the right systems, didn't have the fundamentals down that we talk about all the time to really bolster their business and allow them to efficiently work on what will still make sense. So I think all those things have kept a lot of investors or booted a lot of investors out of the market.
And that's what we predicted, y'all. We predicted that. We said, look, this is an environment where the professionals are going to thrive. And those that don't know exactly what they're doing are going to struggle and get weeded out. And that's exactly what has happened, both on the investor side and as we've just learned on the agent side as well. So you have to ask yourself, what environment do you want to be in as a beginner real estate investor? Do you want to be in an environment where you have less competition, but you need to know what you're doing? Or would you want an environment where there's an enormous amount of competition and you might get lucky? You see, I'm going to land on the first one. And this is the environment that I love to coach and mentor in because we're not dealing with as much of a push for that seller to have, 5 different offers on the table. We're not seeing that. We're meeting with sellers and we're the only one. It's great.
Mm.
And the only competition you really run into out there are the really good ones, right? Are the true professionals, and they can't handle all the deals. So it is right now the best of times and the worst of times. And so I get excited about it, but I think that's someone for each of you out there as you're thinking through moving forward, where do you want to be? I love being in this environment, but you got to know what you're doing. And obviously, that's where a mentor comes in. You've got to align yourself with the knowledge and experience of others because you're not going to have the time and the ability to work through all these lessons the hard way, not in an environment like this. All right, so we've got less competition, everybody. That's a big one. Make sure you make a note of that. That's a big thing to take away from um, tonight's Zoom. The next thing is going to be this. We're seeing this a lot right now, Devin, and that is buyers are more tentative. Tell us a little bit about what you're seeing out there, tentativity of buyers.
Yeah, so I have, like you mentioned earlier, uh, I have a lot of advantages from perspective as a agent in the market and as an investor in the market. And what I have seen in this market is when people go to buy a home, they are more cautious about moving forward on that home, given the height of the interest rates. So their ability to withstand problems within a home has gone down. So we're
Hmm.
seeing a lot of deals fall apart because they're looking at their interest rate, they're looking at their mortgage payment, they're looking at their insurance costs, and they say, I don't want to move forward if I have to put 20,000, 30,000 into a house, right? So we're seeing a lot of deals fall apart, whereas during, 2020, 2021, 22, people had a lot more tolerance for things they had to do on a house based on the interest rate they were about to get.
Yeah. So we have buyers that can get spooked faster.
Much
And
faster.
so what does that mean, Brian, for investors like us when we are in a tentative buyer environment?
Well, when we have tentative buyers, depending, of course, on where you're located, in inventories, it's going to vary competition accordingly. There's different pockets as to what you're going to focus on and what you're going to be doing. But when you have a buyer's market in comparison to a seller's market, there's a lot more opportunities, as Devin's saying, in the Northeast where that's going to end up, causing shifts in the market. And if you're stuck and you need to try to sell, you're not in a good position. That's going to potentially impact prices. But again, the folks that we're working with are generally the folks that have waited out the market. If inventories, wherever they may be, they have to sell fast, they need to take action. They're coming to people like us that can work outside of the box and get them solutions.
And
Yeah, and so we get this when we get a tentative buyer market, we get more opportunities as investors, y'all. Because if retail buyers are tentative when there's an agent, a professional agent involved, well then certainly when someone needs to sell their house fast, we just talked about less competition. So we're seeing almost an uptick in motivated sellers, which is something Brian you had predicted 6 months ago, and they're just easier to work with because they know that the marketplace is different. And even if they were a little bit price drunk from the COVID years, that's long gone now. Interest rates have been elevated for years now.
yeah.
And so now you have a much more pliable, motivated seller to work with. And for you all have been on some of these with us in the past, we talk a lot about how important it is to build trust and rapport with sellers. Yes, they are perhaps more motivated now, but they're also even more skeptic. But the other thing we have to look at too is you all as investors have to consider the idea that there's no more in between in a marketplace like this. Either you're going to get that house fixed up or you're going to sell it as is because you can't really do a halfway job. We did that a lot, Brian, right? In the COVID years, you know, we just cleaned the carpet, removed the junk, got it on the market, multiple offer situation. That's not happening anymore, is it, Devin?
No, people again, their level of tolerance for things that need to be done have has gone way down. So you do have to pick it. You either have to move the product to another investor who's going to take it all the way down and fix it all the way up, or you need to do that and make sure the product's a good product going onto the market because the tolerance level is just not great.
Well, you all, please continue to chat your questions, your thoughts. Tom from California, welcome. Glad to see you here. So, all right. We've been talking a little bit about housing and house prices. I'm going to throw up a poll here. I'd like to get everybody's take on this. Um, Home values. Where will home values go a year from now? Where are they going to be? And we've got down, same, or up. I didn't get real specific, Devin and Brian. I just wanted to get a gauge on our audience here. Where are house values going a year from now? Some of you might even ask AI right now. You can do that, but I'd rather have your perspective. This is not about who's right and who's wrong. It's about getting an overall feel. And we're going to add some complexity to this, but I want you to think in terms of your market, not in terms of the entire United States, but your market. Where are house values going to be a year from now? All right. Well, thank you. And welcome, Sabrina from Texas. Purnell, you're thinking they're going down. Well, I am going to perhaps end this a little early, share the results with you all. 63% of you think it's going up. All right. Devin, what do you think?
I think that question is going to be based on the interest rates, but if the interest rates go down, our market's going to go up. If not, and the interest rates kind of stay the same, we're going to stay in kind of a stabilized market for the next few years, in my opinion.
How about you, Brian?
I think interest rates have to go down a lot for them to really shoot up high. I think a lot more of it is specific to location, where you're located. If inventories are very low, then it's going to continue to affect price and bring it up. There's still the challenges, as Devin's saying, because people are trying to squeeze into what they're getting into. But what we've seen a lot of in the South, in Florida, in Texas, all the way to California, we've definitely seen more inventory, and that has relaxed prices. My brother was telling me, he's a broker in Dallas, about an investor buyer he had that in April of 23 paid 530 for a house that now you can get the same house from the builder for 380. And
Wow.
that's just, don't compete with builders, right? They can beat you in making bad decisions. So again, it's very dependent on where you're located, and you want to keep an eye on where inventories are.
Yeah, I think it is such a dichotomy between the locations. So you all, I'm sure I've showed some of you all this before, but I'm gonna share my screen real quick, and I want to show you just a quick tip on understanding your own housing market. Okay, so hopefully I'm sharing my screen here, and you can see Zillow. If you go to Zillow and you go to sell and you go to U.S. housing market, this brings up this tool right here. And it shows that nationally, the housing market has gone up essentially 1% in a year. But then you can go and you can type in a city or a zip code. So if you wanted to say Chicago, Illinois, you can type that in and it tells you where you're at. Now, interestingly enough, Brian, the Midwest, the center of the country, and up where Devon is in the Northeast, has done pretty well. You can hear me all right?
Yep.
Yes.
Hear you.
Yeah.
Yeah.
Yeah, I mean, look, you all, interest rates at 6.5% to be able to go up by 2, 3, 4%, that's not bad. It's not bad at all. So you all use this tool in your own market to help you get a better idea where you're at because it matters where you're located right now.
Mhm.
I am in Florida. Florida is about staying level. Brian, you're in Texas. Parts of Texas is taking a significant hit, always all because of new builds. Um, and then where Devon's located has been really, really strong. And so for earlier you all put in the chat where you're from. You can go ahead and put in into Zillow where your market is. And so I I want to make this crystal clear though. Where the housing market is going means literally nothing. I mean nothing to do with what we do.
Mhm.
Our business is about negotiating a good deal on the front end and getting out as fast as possible. And so whether the market's going up or slightly going down or staying the same, that doesn't matter to us. Now, what Brian said is so important. That individual house where it's located and its neighbors, if there's a lot of inventory that is going to compete with that house that you're trying to sell, well, now that matters.
Mhm.
But then that's how you negotiate that on the front end with the seller. And so whether it's up or down or sideways, that has never made a huge impact on our business. If you do long-term renovation projects, it could make a big difference. We've got some other people chiming in here. Kareen from Santa Maria, welcome. Pearl from Valdosta, Georgia. Um, Toshiba from Florida, and Purnell has to get out of Memphis. Well, I will say Memphis does have some of the best food right there on Beale Street. I think it's King's Palace, one of my favorite restaurants on earth. So a great place to visit in Memphis. But look, Tennessee's actually climbing, whereas other parts of the South have not. Right? Georgia, Alabama, some of those states have struggled a little bit because of all the building. But what we do as investors is we look at each individual deal and we figure out the best way to make money on that deal. And so as real estate investors, we're in and we're out. If you're buying rental property, you're buying it for cash flow. And we've had some other live events where we talk just about rental property, and it's all about building cash flow. All right, well, Devin, you brought up the point about interest rates. Let's see where our group stands on that subject. Where are interest rates going, everybody? 6 months from now, are they going to be lower than they are now? Are they going to be the same, or are they going higher? And I know you're going to say, well, it depends on the war. It depends. we got to make a guess here. We're just trying to see where our audience lands on this. In fact, for those of you who don't know where the interest rates can be found, Mortgage News Daily, such a helpful tool on that. Newsdaily.com on that. All right. Well, Brian, where do you stand on the future of interest rates, the short-term future, 6 months?
I think Brian's frozen.
Oh, Brian's frozen. You're up, Devin.
All right. I think they're going to creep up a little bit. I think they're going to be a little higher in 6 months. I mean, again, I was bullish on that they were going to go down. I think Brian's back. He's unfrozen. But I
Yeah.
think they're going to creep up a little bit before we see any relief.
What's got me concerned is so they put the new Fed chair in place, and I think there is this assumption that because he was hand selected or supposedly hand selected by the president, that that the first thing he was going to do was to lower interest rates, and that's because that's what Trump's been pushing for a long time. But that hasn't happened, and my understanding, and you all here in the audience, you may know light years more than I do about this. But some of the whole concept of interest rates boils down to fundamental economics. And if you have higher than intended inflation, then you can't lower interest rates because that's going to fuel more inflation. Like you're stuck. So I'm going to land where you're landing, Devin. I think 6 months from now, if the interest rates as of a few days ago were 6.65, we're maybe like 6.75. I think we're going to be just a slight smidgen above where we are. And, it'll do a little up and down here and there. But I'm landing where you're landing, Devin. How about you? How about you, Brian? On interest rates, your guess.
I agree. I don't think they're going to go up much. But of course, that's, as you indicated, definitely affected by foreign affairs. And we've seen in terms of inflation and, gas prices and other things that are out of the control of most of us are
Yeah.
definitely going to influence all these decisions. If there weren't perhaps some of those problems in the Middle East in May when the new Fed chair came in, that might have helped us. But we are where we are. Again, I don't think it's going to move much either.
Well, it looks like we're all on the same page in the audience here. The majority of you selected the same. Yeah. So knowing that, y'all, knowing that the majority of us conclude that it's going to be the same or a smidgen higher than that zone, how does that impact your plans? For example, if you own a home right now, if you need to refinance, what do you do, right? Well, I guess you'd probably just as good to refinance now as 6 months from now. If you're an investor, how does that impact your investing? Well, as a creative house flipper, you should just be doing deals, just be cranking out deals. Don't worry about what the interest rate is today or tomorrow. Someone just asked, what was the name of that to get in current interest rates? Yeah, it's Mortgage News Daily. It's a really helpful tool. Let me tell you why. I'm going to pull it up here for everybody to see. It tells you why the interest rates are where they are. And it doesn't take very long to really get educated on how interest rates work, because they explain it to you. And I've learned so much from the editors of that publication. So here's sharing the screen here, Mortgage News Daily. So like it says, mortgage rates recover somewhat, and it'll explain why. And then you have the rates. So it's okay. It was 6.65 the other day when I looked at it, 6.60. And you click here, and then it gives you a graph, and you can change the time frame. Now you see where we were in the COVID years, and then kind of where we've been. You can see we're just kind of leveling off there in that 6.5 range. So mortgagenewsdaily.com, just a really helpful tool. Really helpful tool. All right. Well, we're in a midterm election year. So we won't chat. Please don't use the chat for your political opinions, but we do want to talk about predictions. Brian, we'll start with you. What impact do you think these midterm elections are going to have on the real estate market, if anything?
For what we do, I don't see a huge impact. I think we continue to do what we do and can ignore most of that. That on the policy level, of course, locally that can impact, and it may drive a few changes in everything we've been talking about with interest rates. But overall, I don't see it having an impact in what we focus on and the problems that we have to solve for real Americans on a daily basis.
How about you, Devin?
I'm just going to echo what Brian said. I don't think we're going to see much impact. And I think for everybody on the Zoom tonight, I think that's if there's one big takeaway, I know for myself, because I was in real estate 3 years before I was coached by the team and now help coach, is your real mindset around understanding what we do. And what we do as creative real estate investors is we are solving people's day-to-day issues, whether it's health issues, somebody passes away, somebody loses a job, somebody's behind in their mortgage. You have to understand that those life issues are always happening, right? So a lot of people, before they get into real estate, they have analysis paralysis. And the reason why they do is they're always thinking about when to get into real estate. Should I get in when the interest rates are low? Should I get in when the interest rates are high? Should I move to a different market? These are all excuses that really have held them back from actually doing real estate. Because when you understand how to get to a motivated seller and provide a solution, none of the outside impact really matters. And I think that's if there's one big takeaway for people to take from this call, from this Zoom call, is the fact that those excuses are really the reason why they probably haven't done real estate.
Oh, such a great point. Does that make sense to everybody? That we're sharing some of these outside factors, but the day in, day out money making opportunity of creative real estate and house flipping has nothing to do with whether a Democrat or Republican became the congressperson. It has nothing to do with that. It is homeowners that need help and they need a solutions provider. And when you know how to provide those solutions, you make a lot of money doing it. It's a very, very profitable way to solve other people's problems. Now, I look also to what happened at the 2 years ago election when one of the campaign promises was to bring back bonus depreciation. And that did come back.
Mm-hmm.
And bonus depreciation is a big deal for real estate investors.
Yeah.
Huge. Put in the chat if you don't know what 100% bonus depreciation is. Put in the chat if you don't know what that is. Because this is one of the most significant updates to our tax law in many years. Okay, Carrie, Tom, Garrett. All right, perfect. Pearl. All right, so this is a giant, giant blessing to everyone in real estate. So the first Trump administration, they introduced this concept of 100% bonus depreciation, and then it did phase out. And then when Trump was reelected, he brought it back. Here's how it works. When you improve a property, let's say you buy a duplex or a fourplex, you improve that property by replacing the air conditioning. Maybe you do a full remodel on the inside, granite countertops, stainless steel appliances, you add washer and dryer. This increases the rent from $800 a month to $1,800 a month. When you make all of those improvements, every one of those improvements can be depreciated in 1 year. It accelerates. 100% of that expense can be depreciated in 1 year or written off or expensed in 1 year. And if you're a real estate professional, Deborah, Michael, Tyrone, Marcus, Ricky, Jose, when you're considered a real estate professional for IRS purposes, no matter what other money you make out there in that year of real estate, you can deduct all of those improvements against that income. So watch this. Watch this. One of the reasons why we're so passionate about creative house flipping and real estate investing the way we do is that we generate a lot of income. But I know what you're thinking. Phil, but isn't that income highly taxed? Yes, it is. As a matter of fact, it is. And what do we want to do with all that income? Well, we want to buy rental property, trophy rental properties, like Devin has, like Brian has, like I do. Trophies that cash flow, trophies that produce wealth. Where does the money come from? It comes from the house flipping, the short-term deals. But if you have to use after-tax money for your rental property acquisitions, it takes a lot longer. Just imagine You flip these houses, you take that income, you invest it in a rental property, and all the improvements you make to that are fully deductible in that calendar year, which means you get to essentially take pre-tax money and invest it long term.
Mhm.
It's unbelievably powerful. It's what every successful real estate investor is doing right now. And it's a huge piece of legislation that's rarely brought up, and few people understand what it actually is. The people that do understand, that's where all that development's coming from. You see all that development going on? Like, hey, with these high interest rates, where's all this development coming from? 100% bonus depreciation. Do you know that's how Amazon builds all those warehouses across the country and across the world? That's how they're doing it. All of the income they're earning, they're pouring it in to more of these giant distribution centers. And essentially all of it, now not all of it, if you got it, if a CPA is on here right now, you'll say, well, Phil, the concrete underneath the Amazon development is not being 100% depreciated in 1 year. Okay, that's true. It's concrete. But almost everything else is. Sabrina, I love your question. Devin, have you dealt much with talking with other real estate investors as they buy and sell on the topic of recapture of depreciation?
We have, because that's what you face when you do. You accelerate the depreciation. But again, we're real estate investors. So we're rolling it into a 1031 exchange. We're constantly pushing it down the line to a point where I won't be around for that.
Okay, Sabrina, did you catch that? We real estate investors get to kick the recapture can down the road. Or if you're like me, I've bought in some opportunity zones. So after 10 years, it disappears too. So yes, the recapture is real for everybody who doesn't understand. When you take depreciation and as a phantom expense on real estate ownership, if you resell that property, it was a rental property for 2, 3, 4, 5 years, and you sell it, whatever you depreciated, you have to recapture that depreciation. That's true.
Mhm.
But as Devin points out, we just kick the can down the road. So Mark, that answers your question as well. Uh, this is the formula, and we've talked about this in other Zooms as well. The formula we preach and teach is that you use creative real estate and house flipping to generate income. And you can do that today, tomorrow, and a year from now. It's not predicated on who's in office. It's not predicated on the interest rates. It is predicated on know-how, on knowing how to connect with sellers, how to negotiate with them, how to put good deals together. And then you do this over and over and over again. That's what we teach. You earn your income there. It's the best small business that's ever existed. And it works just as good now as it did before. And just because it's not the shiny new object like cryptocurrency or now AI, it doesn't mean it still doesn't make a fortune. And then you take that money or a portion of it, because some of it you may have to live off of. You take a portion of that money and you buy trophy rental properties. And then as the time goes by, you have collected a portfolio that pays you monthly for the rest of your life. And the value of the property goes up and the cash flow goes up. And in this case, you're eventually, many of you, if you don't refinance, your monthly payments go down. Although, Brian, I guess we could throw in insurance has gone up, hasn't it?
It sure has. I was telling these guys just before we started, we have a graduate that is actually, or actually, he's not a graduate, he's a current student. He has a second lien position he's holding on a property. And the owner of the property, something happened with the insurance. He's in California in the mountains where there are the potential of fire problems. His insurance policy just went up in 1 year, $5,000. And that is absolutely pushing him out. He had started out at a payment of 1780. About 3.5 years later, he's at a payment of 2780, and this is going to push him well over 3 grand. And he's already stretched the limit. So there's a seller that's going to have to sell, which is actually bringing that deal back to our student who had originally sold it to him. And so he's going to get to do the deal all over again to solve the seller's problem.
Mhm.
Yeah, so clearly it's not bulletproof, right? I mean, there are certain expenses that can go up too. But when you see the progression here, you use creative real estate and house flipping. In the case of Devin, by the way, Devin also does the real estate agency work, and he does it with a in such a way where the commissions are really strong. You build that income, and then you take that and you invest that into the right rental property. Tom, you asked the question for 1031 is for long-term purposes. That's exactly right. I want to make sure this is clear. Uh, you don't flip houses and do a 1031. That doesn't work that way. The IRS needs to see that your property is truly a long-term investment property. Safe harbor is 2 years. You can get away with a little bit less. But yes, 1031 is for you own rental property for the long haul, and then maybe you want to sell it to move into a bigger property or a different property asset class or type. So, so Pearl, you say one of the reasons we moved up here from Florida years ago, I'm assuming that's to do with the taxes. Tyrone, Emergency just came. Okay, so Tyrone, I understand. You can go back and listen to the rest of this through the YouTube. We have that on the live. How long do you have to find another property with 1031? Okay, so Garrett, I love your question. 1031s. See, you have to have a system of generating deals. Because with 1031s, you have to have an identified list, and then you've got to get that done in 6 months, which means you've got to have a system. So you see how this all fits together like a puzzle? Creative real estate and house flipping, that teaches you how to have a flow of deals consistently. You'll know how to find them, you'll know how to fund them, you'll know how to boom, 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 boom. And then that way, when you apply that to finding your trophy rental properties, you'll know exactly what to do there. And then when you do a 1031, you'll know how to make sure you never run out of time. That's a great question. And it's a part of the overall flow. It's a puzzle. You got to have it all fitting together. Well, there are some other things coming down the pipe. Thank you, Stephanie, for posting that. Brian, what's going on with wholesale laws around the country?
Well, we've seen a few states in particular. Oklahoma's had some laws for a number of years. We've seen some implemented in South Carolina. I believe Louisiana, as of August 1st, is going to put some new things in place as well. So there are definitely states that are making it harder for investors to flip properties, primarily if you don't own the property, hence wholesaling. But it also brings us opportunities, right, Phil?
It certainly does. Devin, what do we love to do when we have to get on title?
We love to do a sub two. I didn't even believe it existed before I did it. It was one of the first deals I did. You hear about them. It is possible. I've done many of them, but you also have the right paperwork, the right structure in order how to do that. And that's the gap that people don't understand. It sounds really good. Oh, just take it over sub two. Yeah, in theory, that sounds good, but you got to have the right documentation and understand what deal allows you to do it in and when it makes sense. That's the part you need to learn, and that's where the years of experience come in. That's where the gap is.
And so, you all, if you're in a state where a law has been passed to either restrict or prohibit wholesaling, that doesn't phase us. In fact, it benefits us because it scoots out the people that don't have not filled the gap that Devin was just sharing. And when it does, so Ricky, Texas is one of the few states in the country, I think it might be the only one, that literally has a law that allows wholesaling. It describes how it's legal in Texas. Everything's bigger and better in Texas, right, Brian? Including the wholesaling laws. So, but we love it when a restriction is added that ultimately plays to our advantages. It plays to our strengths, and our strengths are creative financing with sellers. So we do get on title. No law can restrict our ability to get on title. We get on title, and now we have the ability to resell that property in those states where they have restricted. But you all don't be surprised if your state has that law passing in next legislative session, or it may have already passed and it may become live as of yesterday. You might want to look that up. I usually in July I usually get some messages from people. Phil, look what just happened in my state, and so you all stay on top of what's happening with your state real estate laws, because remember they're called lawmakers, not law organizers or law reducers. or they are always adding to your statutes. They're not taking away. And so there's always new laws coming out, and especially the National Association of Realtors. No offense, Devin. They've got quite a bit of lobbying power at a state level.
Mm.
I've been on the capital of Florida before, lobbying for a law that I wanted changed, and that was the same day that the realtors were there. I wasn't there associated with the realtors, and my goodness, they were there in force. You know, they had their high heels, they're running around the aisles. I was like, oh my goodness, they're a force. Okay, so there are laws changing, and they're not changing to help some of the creative real estate investing tactics that we've used for so many years. They're being pushed by realtors that don't want the competition. But you've got to know how to navigate this stuff. Again, it's a tale of two different worlds. Either you're going to be more successful, or the beginners that don't have help, that don't know what they're doing, they're going to have a lot more difficulty getting started in this business model. All right, you all continue throwing out those questions of what you'd like to know about what's going on in the marketplace and where things are going in the next 6 months. Well, Devin, what gets you excited about the next 6 months in the real estate world?
I think what always gets me excited is just knowing how many people think about getting into real estate, never get into real estate. They try real estate, they leave real estate. I just like the fact that I've been consistent with it for, I don't know. I mean, Phil, we've been coaching together for 7 years now, 8 years. I mean, people don't understand it's just a path of consistency with the right help. It's not a matter of if you'll be successful, it's just when you'll be successful. And so that excites me is just knowing that people usually give up on things very easily and they
Yeah.
don't seek the right help early on. So we're going to have a great year. We had a great year last year and we're going to continue to do more deals. So I just try to stay as consistent as I can. And I know that's kind of my superpower over other people.
Now, why does consistency, why does that give you peace of mind, in especially the world of real estate? Where does that come from?
It comes from the fact that it's real estate. It's something we all need. I think
Yeah.
we've joked around before through different conversation is, if they figure out how to keep us from not sleeping, we might have a problem. But people need a place to sleep, and real
Yeah.
estate is here to stay. And that gives you real peace knowing that deals are going to continue to come. People unfortunately go through circumstances in life. I call them life situations, and that's a constant that is not a variable. It's constant. And that when you have knowing that that consistency always going to be there as long as you show up, it gives you a lot of peace.
Definitely. What about you, Brian? What gets you excited?
Well, we've talked about some of the things that aren't improving. Interest rates aren't necessarily improving. Inventories are growing in certain areas. Prices are coming down, possibly in some areas. There's a lot of doom and gloom. And we know that's what the news does. If it bleeds, it leads. That is what Devin referred to earlier in terms of agents. It's really creating a bigger gap. It's also doing the same with real estate investors, as we just said, with the wholesaling laws. Laws like that scare people that don't know enough about the business and really are a one-trick wonder. It scares them out of the business. They don't know how else to do it, and they move on to something else. Maybe they're into the AI gold rush that Devin mentioned, right? But the idea is that it leaves more opportunity for those of us that have lots of tools in the toolbox, know how to solve a variety of problems because we've been doing it year after year after year. And so it means more opportunity. So when you can go back to the fundamentals, you have a lot of different tools. We are just always looking at who needs our help. And unfortunately, when it's doom and gloom out there, there are folks that can't stay in their mortgage any longer. They've got to do something, divorce, death in the family, moving for a job, whatever the case may be. And it's time for them to make a move. Maybe they have equity, maybe they don't, maybe they just need this done yesterday. So those are the folks we're able to work outside of the agent box when they need a solution. So it just means more and more opportunity. So I think all these negatives that perhaps some of what we're talking about here today might point towards are really going to unfortunately push some people into needing our help. But that's what we at the end of the day get to do. We get to help people with the most expensive asset they're ever going to probably own in their life. They have a problem with it. They need to live to fight another day, and we're able to make a significant difference in their life to allow them that opportunity to get moved on to a better future.
Mhm.
I mean, that is thrilling. That's how exciting that is.
And just to jump in, Phil, a lot of people talk about foreclosure. It's the word, how do we get to people to foreclosure, right? Before, to help them. Yes, that's some of the people we help. But the other day, just to give the audience an example, I was talking to a motivated seller through our lead gen process, and I asked him what he wanted for the house. And he says, "Well, I have an appraisal for 380. I want 300, okay, for the house." And the reason why he wants to sell to an investor is the fact that his daughter-in-law is living in the house. She's not paying him rent. He's older and he does not want the stress of the property anymore. He doesn't even want to go to market, even though he knows he can get more money. And those are the type of things that we run into with the sellers that we attract through our marketing efforts, is that people in the audience don't even understand the psyche of the people that are reaching out to us.
Yeah, yeah,
That's huge. That's a really big thing you need to pick up on.
yeah, yeah. And so Carrie's asking that question about how we connect with those people that do that. And so, yeah, this is one of those unique situations where they're ever present, but it's elusive to the outside world, because if you've never met the person that says my appraisal's 380, I'll take 300 and I'll be happy at 300. Like, that's hard to reconcile, but they're there, they're out there. And these lead gen techniques that we have pioneered, and I'll tell you, Devin is always on the forefront of that. I really appreciate Devin being the type of person that's always testing, and it's painful sometimes. You test things and they don't always work, and we're always staying on the cutting edge of how to find the best deals. And obviously, we wouldn't have time on a training like this to go through that. And even if we did, it wouldn't be enough time. That's one of the many things that we do in our program. Now, some of you might be asking, okay, you have three of the, we'll say you two guys, I will, but some of the sharpest minds in real estate here tonight to share with you this information, absolutely free. What's the catch? What's going on? Well, we're obviously here to attract, to recruit those that would like to work with us. And that's what our program is about. We teach people how to invest in real estate the right way so that they can transform their financial life, become financially free. I'm coming to you from a gorgeous property in Isla Mirada. Devin coming to you from an island off of Rhode Island. Brian coming from the greatest place in the world, Texas. Look, we get to live our dream life. And if you've been on any of our Zooms over the past 6 months, you've met a ton of people that have been through our program and have said, yes, they're for real. Yes, it works. Yes, I made $250,000. So that's what we're doing here. Where we love to teach, we love to share our wisdom, which I hope you all have gained a lot from tonight. And we're hoping that some of you want to work directly with us, and we'll do deals together. And when I say together, I mean we're with you every step of the way. And and in some cases, when money is necessary, when a creative arrangement is not exactly what the seller wants, and we need actual funding, I put in the money. I've funded some of Devin's deals. I've funded so many of the deals you see of the people that you've watched. And so we're there with you every step of the way to help you become successful. Because when you succeed, we succeed. When you win, we win. In a way, we're duplicating our efforts. You see, we know that the way real estate works is you need somebody on the ground level. You need somebody who is intimately attached to the outcome. Are you all aware that Zillow tried to set up a house buying operation? Uh, they lost $1 billion doing it. A billion with a B. Redfin tried. There's several others, and eventually they became publicly traded companies. One's called Open Door, another called OfferPad, and in both instances, they're barely scraping by. If you're a stock, if you know how to short stocks, those are two good stocks to short because they're doing terrible. So how do they do so bad? They don't have somebody on the ground floor that's intimately involved in making sure that succeeds. They just have some employees. But see, what we've done is we've duplicated our efforts through our program, our Freedom Mentor Apprentice program, and that's what we're doing. And so, if you would like to learn more about that, if you'd like to learn more about working with me and with Brian and with Devin and our entire team, I'd like for you to select yes here on this poll that just popped up. And we like to share more with you about exactly how it works and the upfront costs and what you need to expect because this is life transforming. We've transformed the lives of so many different people. You're seeing Devin here and you're seeing Brian here. Both came through the program early on, and they still love what they do, and they come back here to coach, kind of like Top Gun. If you ever seen the movie Top Gun, they came back. They're like Maverick and Maverick, uh, and they've come back to coach for us, but they still invest in real estate, and it's because it's that good. And by the way, when deals close, they get a portion of the net profits. So we share in the profits 50-50 until you make $500,000 net. We split that 50-50. So you get $250,000 in your pocket. That's $250,000 of money that wouldn't have been there without our expertise. And so they get a portion of that 50%. And so that's why they're here as well. I know that some people are asked the logical question, if someone is so successful in real estate and they're doing so well, why would they ever get on a Zoom to tell me? Well, now you know, because we are duplicating ourselves. And when you succeed, we succeed. So if you'd like to learn more, select yes right there. It says here, Pearl, y'all are truly awesome. So many others doing webinars aren't live, even though they say they are. Yes, we're absolutely live. But part of the reason why that is, Pearl, it's because we want you all to see that we're real. This is a weird world we're in. I mean, I had someone put together a video for me on something I was doing, and they just kind of changed my face a little bit, and it wasn't me anymore, but boy, it looked like a real person. And it was like, yikes. I mean, I'm almost behind the times, Brian Devin. AI's doing some crazy stuff. But yes, we're live to show you that we're real. Real estate's real, we're real, and the money is real. Now, you do need to know what you're doing. There's a lot of people that are not succeeding in real estate, and it's logical as to why that is. They don't know what they're doing. But when you know what you're doing, this is the greatest small business. What do you think, Devin, overall about your decision to get into real estate all those years ago?
It's the best decision you can make. I mean, the first deal I ever did, it was a sub-2 deal. I think the check was 62,000.
Yeah.
Right? And I really didn't have much money at the time. To me, it's the best small business because if you make two, three, four, 500,000 and up, you don't have to carry multiple employees to do this. You
Yeah.
don't need to do 100 deals a year. You do 5 to 7 good deals, you can make a couple hundred grand a year.
Yeah.
And for most people, that is unfathomable. For
Yeah.
me, it was too as well. So it's understanding that these deals exist, they're real, but you do need the right help. And one thing that I will say about real estate is no matter how skilled you are, every day, all three of us on this call will learn something new about real estate. And then
Mhm.
we will talk to each other about it and improve each other. Iron sharpens iron. So we're able to improve our skill sets. It's one of the things in life that real estate you can never know too much.
Yeah. Yeah. Absolutely. What about you, Brian? What are your thoughts on the decision to be a real estate investor?
Well, it's absolutely transformed my life. That said, I struggled, as most people that have probably jumped on before have seen. I struggled probably for the first 7 years that I was involved in real estate, long before we met. And in that time, I was learning everything the hard way. The whole concept of a mentor was just not something that came my way. I knew a lot about gurus. But it wasn't until we met that literally within about a year and a half, I made more money than I had in the previous 7 years. And it absolutely transformed my family, our future, my kids, which I've got a bunch of. They don't know anything about dad leaving other than I walk over to this other building where I've got my office so that we don't hear him screaming. So it's been an absolute game changer, and I couldn't have gotten here without a mentor. What it really delivered me was freedom.
Yeah.
Freedom with my family, freedom to homeschool our kids, freedom to pursue the opportunities and teach them the next generation. So it's just an absolute life-changing decision to make.
And it's the kind of decision that the sooner you start, the happier you're always going to be. I've never met a single person who's ever said, man, I wish I would have gotten started in real estate later. Never.
Hmm.
I've met thousands of people that say they wish they would have started sooner. So it's like the old saying, the best time to have planted a tree was 20 years ago. The next best time is today. You all, the best time to have gotten started with our program was 5 years ago. It was 10 years ago. It was 15 years ago. The next best time is today. You have a tremendous opportunity right here in the second half of 2026. We'll lead you to the promised land. We know how to get you there in these circumstances, in this environment. In fact, I think it's a better environment than it's been in years. It's a wonderful situation. You have less competition. You have a lot more opportunity because a lot more motivated sellers. Now is the time. So, for those of you that have selected that you'd like to learn more about being mentored by us, the next thing would be how would you like for us to connect? Would you like to connect with us right now? Select right now if you'd like to connect with us right now. Or would you like to schedule for later? So go ahead there on the screen, select right now or schedule for later. If you selected right now, then what we'll be able to do is our team will be able to call you. And it's really cool how this technology works. If you want to schedule for later, you got the July 4th holiday coming up. You certainly can schedule for later as well. But there is no time like the present. I have also learned that taking action is among the most powerful things I can do. I
Mm.
can think, I can study, I can review, but it's once I take that action, that's when the magic happens. So I want to encourage you to take action, and if you want to connect right now, now is the time. So I'm down here in the Florida Keys, and there is a famous treasure salver. He hunted for treasure, and his name was Mel Fisher, and he discovered the greatest gold discovery. It was a shipwrecked Spanish ship. It was off the coast of Florida, and he had a saying. He's got a museum not too far from here where I'm at, and it says on the top, "Today's the day." And that's what he said for 25 years while he was raising money to go hunt for gold in the ocean, like you'd see on a movie. And he hit the mother lode. That's where that phrase came from. And it was Mel Fisher. And he had taped up to his boat for his staff, "Today's the day." So for you all, today is the day. Today's the day where you go from where you have been to where you can be, where your destiny is, and that's financial freedom. It's through real estate, and you're going to get there with Freedom Mentor, with Devin, Brian, and myself, and the Apprentice Program. All right. Well, you all, if you selected right now, our team will connect with you. If you want to schedule for later, here's how you do that. Let me show you right here on the screen, and we're also going to put the link up. You go to freedommentor.com/schedule. freedommentor.com/schedule. I'll show you on the screen. And here we go, just to direct you right here. You submit the state you're located in. So let's say you're in the mighty state of Texas, where the wholesaling is actually in writing that it's legal. And then right here, you select your time. So we have some availability tomorrow and again on Monday and Tuesday for our team. So you go to freedommentor.com/schedule. All right. Well, Brian, Devin, what a gift and a blessing it has been to have you both here, especially when we're getting ready for a fun holiday weekend. Um, Again, Devin, thank you so much. Any last words for the folks out there?
My best advice for anybody would just be don't listen to the excuses of everybody else. And at some point, you have to get started. It was for me. I had to jump in. The best way to learn is by doing something, and the way you do something is being taught from people that are already doing it. So that would be my advice: is just Stop listening to the excuses. Stop thinking next year, 6 months, just get it done and start moving forward.
Great advice. How about you, Brian?
What was already pointed out, we're dealing with real estate. This is a real opportunity. The reason we're live is to help you understand that this is the opportunity, that the vehicle that can absolutely transform your life. If you're willing to put in the hard work, you can accomplish anything you'd like. You can absolutely change the future for yourself and your family. We're here to help you do it. We've helped countless people do it. It's a wonderful opportunity to be a part of, a wonderful Freedom Mentor family. We'd love to have you part of it.
Absolutely. And mine, today's the day. Just picture all the gold that Mel Fisher coming out of the ocean with. Today's the day, everybody. All right. Well, have a wonderful July 4th weekend, everyone. Thank you so much for being here. And Devin, Brian, again, thank you all so much.
Yeah, thank
Thank
you.
you, guys.